Hey everybody, Day Trader Rockstar here with you. An updated video going out for futures traders, for all kinds of traders, for a lot of the new traders that have joined us over the last few days. This is kind of a review, also kind of prepare you for tomorrow. Tomorrow we do have the Fed rate decision at 2 o'clock. It is a very volatile time of the day, but we will be covering that. Another thing, if you get this video earlier enough, I will be doing a special show tonight at 8 o'clock. To help everyone get established here at Day Trading Radio. We have a lot of new members and stuff. They've come over from the podcast that Desire to Trade put out. So I want to welcome everyone and try to keep you up to date on the learning process here, because there's a learning curve to kind of understand the methodology here. I've been answering questions all day, but I wanted to go over and just kind of talk about a couple of things. Tomorrow we do have the Fed meeting tomorrow. Typically before that, we tend to have a kind of a more of a mellow market leading into the event, because the event is really the volatility comes in right at that time frame at 2 o'clock. So tomorrow we're probably going to have a small, not a very big moving day, but we might just kind of hang around at this level. That doesn't matter either way, because what we're going to establish, and what I really want to go over with right now the futures traders out there, the people who want to aspire to be successful in futures trading, is the importance of identifying a channel in your markets. The channel is a directional thing that we're going to be looking at. And in any situation, this is going to really tighten up your trading, because most traders are going to be you're going to overtrade. You're going to have way too many trades because and a lot of you might be prop traders. And when you're a prop trader, you're like, F it, this only cost me $14, $15. I'll gamble with it. But that doesn't, that's not something that's going to make you a successful trader. It's going to be a rush. If it works, it works. It doesn't teach you anything. It doesn't make you consistent. But I understand that. We're all human. I do that too. Tomorrow I typically, I do make a point to trade the prop account into the FOMC meeting. I usually get a cheap one. The coupon right now on the Bullocks is 90%. It ends tonight. 90% coupon ends tonight. So you can get that 25K, which I would recommend trading into the FOMC rate decision. That's only $14.50. It's a good risk reward if you did qualify on it and got a right direction. Now, tomorrow, 50 basis point cut or a quarter basis, that's the toss up. And, everyone's trying to figure out which way it's going to go. No one's really going to figure it out. My guess is 50 we pop and then roll over. A quarter we drop and then kind of maybe hang around and maybe even start to move back up. So definitely it's just going to be a toying cost, and we'll see which way it really goes. It really is hard, and we might actually get a divergence. Divergences happen when there's a lot of volatility and a lot of volume coming to the markets. So that's always a good spot to look for a divergence, and we'll jump on that perfectly. A lot of new traders. If you don't want to miss the setups, I highly recommend the great setups. Like I'm managing the markets all day long. We're calling the markets, having a good time, going over news, taking questions, doing education. And when we have a setup, we want to take that. Now I'm in front of the markets from 9 o'clock to 4 o'clock, and then again tonight from 8 o'clock to 12 o'clock. We do a lot of trading here. And it's important to be sometimes in front of the trade, so you have an opportunity to get that trade. And if you're not there, then it doesn't matter, all right? So I found out how important the super signals are, and the super signals are really the trades we want to take. And you probably learned a little bit about them watching the video that got you over here to Day Trader Radio. The super signal is a confluence of a couple different things happening. We want to get the quad rotation, which is our stochastic oscillators here. All four of them represents different time frames and stuff. So it's different time frames that are all merging at the same time. We also want to have what I call a recognizable channel or a pattern. That means it kind of gives us a width of the range that the stock is traded, or in this case the futures is trading in. Usually identify the pivots, and the pivots are, channels are broken down into all kinds. You have big channels, and inside the big channels you have micro channels, and inside the bigger channels you have much bigger channels. So we work on a channel system that's, representative on the 5-minute and 1-minute time frame. And what we're looking for is a series of pivots, meaning a little bump in the bump, or anywhere the market changes direction. We look for a pivot, and that could be a pivot here, a little pivot here, change the direction, came back here, a pivot here. If it's that tight, in this case, it's very hard. It's a very tight thing, and what we're looking for is waiting for a channel and waiting for a signal inside the channel. That's going to prevent you from over trading. So going forward, I'm going to kind of show you this real fast. And don't forget, 8 o'clock tonight, special show live, Day Trading Radio to help you out. If you have any questions or anything, I'll help you set up your prop accounts, get them ready for tomorrow. I'll help you set up your templates, the Ninja Trader bots, everything. It's kind of an open session to help anybody out there. 8 o'clock tonight, we'll be there trading also. Move over everything. And so back here. So what I'm always looking for is that channel. If we get a move up, I'll start to identify here's our main pivot right here. And that's a pivot that we're going to start with. And I'll start looking for the pullbacks and just kind of, even in this case, because it's at 7:45, it's very, very, there's not a lot of algorithms really trading this early. Things are kind of just moving and gracefully moving, and it moves up and then it moves down. You can see here's a channel down here and here's a channel here. So this is the pivot. So when we have a big move and a move from out of a downward channel to an upward channel, that area is called the pivot. And that's what I identify. That's what a super signal identifies, because you want to be in at the best point. If you looked at any place here and said, where is the best place you would like to be in on a trade? Of course, it would be here to here, right? So that's how we're able to identify this. Also able to identify when a channel breaks down. So here you have a high pivot, and you have a couple, you have a pivot, and you have a pivot here, and then you have a pivot here. Right when you have those three pivots, this one, and this one, you'll throw this line in and just throw it down there. And then this one, right when it comes up here and you get a pivot, you just put it in there and you throw it down there. And now we're looking for the same thing. But the key here was, this was an upward channel. You had a higher high, and a high and a lower high. So that is our super signal right there. That is our super signal. Then again, and not every channel is going to give us that. Some channels we're not going to be able to tell when they break out, but most of them we should be able to see. We're concentrating on the channel, the lower channel line, and the next bounce down. So lots of times we're looking for a low, a bounce, staying in the channel, coming down, going a little bit lower, or hanging around at the same level, and a much higher stochastic rotation. That divergence right there is that is the pivot. That's the pivot marker typically in a channel. That's when the pivot's going to be, and that's when you're going to get a breakout of the channel. So anytime the market's going, and once it starts to go, I tend to I define in a channel, and then watching this channel line. And even if we have a pivot here and a pivot here, I'll throw another line up there. Now we have this line and this line. This line, because it's a little wider, I kind of just let it go. Now I realize that we have a good underlying trend line. It really just started to appear here, right about here. Really confirmed. The top one was here, and it just touched here. So we had this channel line that we were able to follow. Here we had a quad rotation. That's a setup that we have all time frames lining up on a lower trend line. That is considered, the beginning of a super signal. When you have a quad rotation and a trend line, or a quad rotation and a divergence, or a quad rotation and a VWAP, all those combinations. Here's a quad rotation, VWAP right here, are going to lead to more explosive pops. And we're trading short term. So this is not about, am I grabbing that long and I'm holding on to it? This is about understanding you're going to get in. You're going to hold it on a 1 minute time frame, maybe for a maximum of 10 minutes at the most, unless it's a bigger setup based off of the 60-10, which if that's on your side and there's bigger things and we're analyzing the market and we're in an uptrend, there's reasons to keep it on. But most of these, we're going to give you a profit right away, and it's up to you to take profits. If you're in a downward channel and you're going to bounce, you want to take the profits with a 9-3 rotation. Every time that 9-3 rotation goes up, you sell in short or reverse or whatever you want to do. It most likely will come back on you. We get down here. We get down to the lower trend line. We got oversold level again. We actually start to base out here, and we kind of had a little higher rotation here. I'm not going to call this, but There was a kind of a higher rotation off of that low. And we really look at the closing prices. And even though it's a little bit lower, relatively speaking, that was a huge, steep divergence here. Very steep right there compared to that candle right there. That candle right there. And this little dip and push back up was very strong. Any type of divergence inside of a recognizable channel, 9 times out of 10, the channel will break out. So when we start to see these things, and there's a lot of channels to be going because I'm micromanaging these charts on a 1 minute time frame. So it's, here's a pivot, here's a pivot, here's a pivot. I'll just extend it. Maybe you can't find this. Didn't take a trade here or anything. It popped back up. Now I have a pivot here and a pivot here. I'll put a new line in here and put that out there. And then all of a sudden you'll start to see things work. You'll see, all right, you had a good pivot here, you broke down through it, didn't tested it. Came back and tested. Now, all of a sudden, this line, which was kind of just the 2 lines, but we really need a test of 3 or more times to really confirm that trend line and make it worth its while. So even if we break down through, if we come back up to it and say, wow, and we hit it again, because we always extend those trend lines, and we hit it again and it holds, then that validates the trend line. And it really becomes a one that we want to pay attention to going forward. Now, I don't know if we went back and hit. We never did get back up, but we got close to it. We came back up to it and then got oversold on the 9.3 and then rotated back down. So all these things is what I'm doing, but you should only be taking the trades that I announce on the the Trader Futures Trade Alert Network, which comes with your membership. It comes with your paying membership. Trials have to get it through Patreon, which is a special price. Very, I'm so proud of this service, and I know it's a savior for a lot of traders, and it's I don't mind putting it out there on a very cheap, or actually inexpensive. I shouldn't say cheap. It's very valuable, but I put a discount on it for a lot of the desire to trade traders who are coming over to get in that. But if you're a member of Day Trading Radio, you automatically get it as a paying member of Day Trading Radio. If you're not a Day Trading Radio member and want to try it out, you can go to the Patreon site and download it there. Very important. I'll show you how important that is. So here we had let's take a look here. Actually, there was a beautiful, beautiful setup here. This is what we call a 5-minute divergence when we have a 60-10 setup. 60-10, and we had a low here and a lower low here. So from that low, I have so many lines sometimes, to that low here, I'll move that down a little because it's not a proper low, right to the closing price. We're using the closing prices more than the extensions. And there's a slight lower low on this, very slight, maybe a tick or two. But you could really see on the 60-10, there's a much higher rotation. And that's really important because that's our big time frame. That means the 5-minute time frame is giving us a divergence. And that is all hands on deck type of trade. So right back here, we're able to go to our SPY chart on the 5-minute time frame and look at the 5-minute chart, and you can see that low and that higher low right there. And we take that trade right there, and it was a good trade. We got 5. Actually, let me. What time was that? That was at about 1:45. So right when that divergence came in, we called it out. And when I talk about it, so we took it for 5 points. 5 points on a high probability zone like that is easy. It's easy peasy. And that's what you have to do. And you got to do. They're easier trades because you can wait on those. It's like moving a big ship. It takes a while to move these 5-minute charts versus the 1-minute chart, which is all over, bang bang, all over the place. So that was a good setup, and that's the ones we really have to wait for. Now, to give you an idea of how important the Future Trade Alert is, let's take a look at the trades today on this. Just to kind of review. That way you know what you're expecting. I did quite a few alerts. Let me see what the hell's going on here. 3, 2, wow, I did a lot, didn't I? No, I did okay. I had a lot of people, too. I think that's what it was. What time was that? All right, so let's see what it says. So this is right around that time, right here. So this is about right here when we noticed that, and we had some people in the room call out the 5-minute divergence, which was really good. That's really important to have extra people eyes on the sky there.
Interesting setup here at 153. We have a 5-minute divergence that's formed around 56.90. It's already 56.97, but I just recently got in this. I think it's a pretty good setup for a further move upside on the bigger pattern. We're looking at a possible target about 57.13 where the VWAP is, and before that is the 200 period moving average, which is around maybe about 5-6 points above us. So it's kind of a late alert on this, but it's a bigger alert. It's a 5-minute time frame. I'll send you a picture.
So then I send out.
It's 2:10 p.m. We just had a nice 5-minute divergence.
So this would be taken off.
Divergence. It started about 140.
All right, so I'll kind of take those trades, send out the alert to make sure everyone's on board, and then kind of follow up on where the level was. We get up to about the 200 period moving average before rolling over. It was about, and I got 5 points on it. Those, you don't want to miss 5-minute divergences. The other ones that come in, not that, very basic. Let's see what we have here. I want to try to bring it up for you. $209 was the last one when we took profits. So I did take the profits on that. This was that one.
Around 56.85, give or take a point or two. It's 57,700 right now, 5,700. And we're entering a quad sell signal. So I took the profits on that 5-minute divergence up here. But still, again, just put out there it's a 5-minute divergence. It's usually our big reversals. And there's a big channel that we're in. I'm going to send you the picture, and we just broke out of that channel line. So there is some more upside potentially, ahead of us.
All right, so that is a little update on the trade. So again, this is not requiring you to be in front of the computer all the time. You might be doing something else, but if you hear there's a 5-minute, you might want to wander over on the computer, investigate it yourself. I usually send a picture of the setup also with it on the phone. So that's on the Voxer network. I love it, and I'm very proud of it. A lot of people are signing up on it, so just keep things going there. Let's take a look at all right, let's see. 1 o'clock. Okay, you can see the bigger channel here. Remember we were just talking about that 5-minute breakout from this low to this low, and that represents this downward channel, this big channel. Remember, look at this line down here. It had 3 pivot areas there, and then we came and we broke down through it. Remember, when we have the original lines that you start a trend line with are the ones that you really want to hold true. And even if it breaks down through it, you're going to keep that line extended out. Because what typically happens if that trend line's worth its weight, you'll come back into it, then you'll kind of consolidate off of it. Or come back to it and then bounce off of it. The next time it comes down and visits it, it's even twice as strong. It's like the leg that's been broken and then the heel twice as strong. It comes back and it's a perfect trade setup, and that just happened at 145. That was the divergence. So you can see this was the divergence, and now that you have a 5-minute divergence, there's a 9 out of 10 chance that the channel is going to be broken. And yes, it did. So you could get in, and you know that you're probably going to get through the downward channel line at one point. Then we actually had a sell divergence here. There was a high and a lower high. There was a high and kind of a higher high here, and it kind of just started drifting back. And guess what? We had a big downward channel starting to form here. There's a couple trend lines on top, a little pivot area there, and we start to manage that. Now we're into the 3:30 time frame. It really should be a no trade zone. This is when people mostly overtrade. So I tend to try not to trade, but if I do, I still want to stick to the setups. Some days you're going to have 5, 6 setups. Some days you might have 1 or 2, and on some occasions you might not have any setups. And that's the key to success, is understanding that not every day the market's going to give you, and you can't force the market to give you that setup that's going to give you a high probability zone. And a high probability zone is that we know that divergence quad rotation works 90% of the time. And if you're sitting there watching and confirming it and knowing everything is good about it, there's no news showing up, there's no Fed talk or anything, it's your opportunity to make money. And that's when you take the bat off your shoulder. Very, very important. Now, I did another video on channels. I want to send that out also. But I did it the other day because I wanted to go into the beginning of the week, and I kind of wanted to just lay out the rules on identifying a channel. And so there's going to be 2 videos. Watch that other video. It really hammers home the importance of the channels and making sure that the setups are in these channels. The other good thing is if we're on buy side traders, and you could be a short side trader, but whatever side you're on, if we're a buy side trader, we want to buy the weakness into a lower trend line. If we're a sell side or a shorter, we want to short the top of the channel lines, because that's where we're going to come back down. The 9-3s always want to be on our side to start things off. That's the easy thing right there, making sure you're not over trading against the 9-3. If the trend is down, most likely every 9-3 is going to be sold. So you probably have a better opportunity of shorting every 9-3, not even thinking about it, just closing your eyes and shorting if you're in a downward trend. If you get up here, it's much safer to throw in a short here and look for that rotation down, take a couple points and move on. It gets back up here, you're overbought again, downward channel, it rolls back over, gets oversold, here's a divergence. You go long on a 5-minute divergence, much bigger move, gets through the trend line, and here again, sell side divergence, back down, buy side quad rotation. It all adds up. Question is, do you have it? Do you have what it takes to have the patience and to identify these and be there? It takes time. It takes time in front of the screen. I'm trying to help you with that, so you don't have to be in front of the screen all the time, but it does take time. So hope this video helped. I'll see you guys later tonight. If you need any help, you can reach out to me, ironaction@yahoo.com.